what are the investments that you can actually make? Let me start by talking about how do you analyze stocks on the active side, then I'll go into the passive side. When it comes to this active type of investment, if you want to make the decision of should I invest in, hypothetically, Amazon or not? Again, I'm not telling you what to invest in. I'm just giving you examples because I'm not a financial advisor. But if you were trying to decide if you want to invest in Amazon or not, what you have to do is you have to ask, is the CEO of Amazon a good CEO? Somebody that you would hire to run the company? Is it somebody that you trust? Are they creating a good product that's innovating for the future? Do you think they're going to have more value in the future, and are they going to be more competitive in the future than they are today? And then you also want to dig into the numbers. So when you do this type of active research, when you're researching individual companies, this is called fundamental analysis. There are two different types of statements that you want to look at: 10Ks and 10Qs. 10Qs are your quarterly financial statements. Your 10Ks are your annual financial statements. The annual financial statements are a little bit more substantial because these are audited statements as well. And you can find this data either on a company's investor relations page, like right here is the Amazon's investor relation page on their website, or you can go to the SEC website, like right here is the SEC website for Amazon, and you can find the same data there. Now, what you want to look for in these financial statements are three different things. You want to look at the balance sheet, the income statement, and the cash flow statement. These are the three main financial statements that every publicly traded company, every stock in the stock market has to publish. And what these statements show you is, number one, the balance sheet shows you the assets and liabilities. Now, just like anything else, what you want to take a look at here are, does this company have more assets or more liabilities? And if they have more liabilities, is there a reason why they have more liabilities, and what types of liabilities are these? So this is going to involve some financial analysis on your part to kind of dive into what types of assets and liabilities this company has to see how much is this company actually worth. The second thing I want to take a look at now is the income statement. This is the profit and loss statement. And now what you want to see is, how much money did the company make? Top line, how much revenue did this company generate? What are their expenses like? And then what is the profit like from this company? But not just that. You also want to get an idea of the trends. Because if you see that this company's expenses have been shrinking, that might be a good sign. If you see that the expenses have been rising year after year after year, that might be a bad sign, especially if their profits are shrinking. Now, this is where I also want you to take everything with a grain of salt and dig in a little bit deeper into the analysis, because sometimes what you'll see happen is a company will have rising expenses and shrinking profits because they're investing more aggressively back into the company. They're purposefully taking money out of the profits to invest back into the company, to hire people because they want to reinvest into new divisions and they want to make smaller profits now. That way they can grow bigger in the future. That might be a good sign. And this is where you're going to have to do that sort of analysis and to listen to the company's earnings calls and understand, where are they spending their money? Look into the numbers to see where they're spending the money, and then see why they're spending their money in that way. Then you also want to take a look at the cash flow statement. And what the cash flow statement shows you is the flow of cash through the company. And this is where now what you want to look for is, again, what is the company doing with their cash? Are they making smart decisions with their cash, or are they not? Now, this is again, very deep analysis. We'll go deeper into this on my Stock Market Mastery workshop. But this is where what you have to start to look at is, are the companies that you're researching a good company? Do you like how they're using their finances? Do you like the product? And is it a good stock price or not? And if it is a good stock price, then you may want to consider buying. If it's not a good stock price, then what you have to do is identify what is a good stock price for this company for it to be a worthwhile investment for you. This is the active investing, and I understand it's a lot more work than just finding a random company on Reddit and then purchasing that. But if you really want to be an involved investor and you want to make smarter decisions, it helps if you have more financial education. Now, again, you don't have to do this type of analysis. In fact, I think most people, 98% of people, shouldn't have to worry about this because you can just do a set it and forget it system through passive investing, which is now where you invest in funds. This can be index funds, ETFs, or mutual funds. And what a fund is now you're investing in a basket of companies. Instead of deciding if you should invest in Amazon or not, what you're doing is investing in a fund that gives you exposure to dozens of companies, or hundreds of companies, or even thousands of companies, one of which might be Amazon. And now it's a set it and forget it system where every week, every 2 weeks, or every month, money is automatically invested into your fund and you don't have to do anything. It's automatic, and now you let the fund do its thing. Now, there are a lot of different types of funds that you can invest in. And this is where what you have to decide is what is the right fund for you. And I will give you a few examples of some of the more popular ETFs. Again, I'm not telling you what to invest in, just a few examples. Starting here at the top, VTI is an ETF. So if you go out and you buy one share of VTI on whatever stock brokerage you're using, you're buying this ETF, which gives you exposure to the total stock market, the entire stock market. If you go out and you buy one share of DIA, this will give you exposure to the Dow Jones Industrial Average. You've probably heard that word before because it's the most commonly talked about index or group of companies on the stock market. Well, you can invest in the Dow Jones just by investing in an ETF that gives you exposure to the Dow Jones. You can go out and invest in something like SPY, SPY. If you buy this ETF, this will give you exposure to the S&P 500, a group of the largest 500 companies on the stock market by market capitalization. Now, instead of you going out and investing in all 500 of those companies, you can just invest in one fund and it'll give you exposure to those companies. And if a company starts to go down, this fund will automatically kick out the bad company and put in a new one. You can invest in funds like QQQ. This will give you exposure to the NASDAQ. You can invest in funds that give you exposure to something like SPYD. For you cash flow investors that want to invest in dividends. SPYD gives you exposure to the S&P 500, but only companies that pay out dividends. So dividend paying companies in the S&P 500 if you want to invest in cash flow. Now, there are many, did I say many? Many different types of funds. ETFs, index funds, and mutual funds that you can invest in. And we just got to decide is what is it you want to invest in. These are some of the most popular. There are funds that will give you exposure to real estate. There are funds that will give you exposure to healthcare. There are funds that will give you exposure to innovation. There are funds that will give you exposure to emerging markets. You just have to decide what it is that you want to invest in and then find the right funds for you. But the key here is you want to have a set it and forget it investment strategy. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.